Hello, everybody, and thank you for joining me today. It's Alan Barry Labucan with the Rocks and Stocks News website. I've got another in our series of CEO interviews. Today we have Darwin Green. Darwin runs a company called HighGold Mining, and they have really burst onto the scene of late. And I wanted to get him on to talk about some of their recent news. Darwin, thanks for joining us.
Yeah, great to be here, Al. Good to connect with you again.
Yeah, it's been a while. Darwin and I know each other from previous lives in our career. We worked together, and I've always known Darwin as a really smart geologist. And now he's got his hands on and he spent a lot of time up in Alaska, and got his hands on something that really caught the market's imagination recently. On October the 6th, they announced that they intersected 578 grams of gold, 2,203 grams of silver, over 6.4 meters on their first hole at Difficult Creek. Let's start talking about that, Darwin, because that's certainly some eye-opening numbers.
Yeah, well, it was a fantastic start. We really couldn't have asked for more. And I mean, that was our first hole stepping outside of the main deposit area where we'd been drilling the previous year. When we acquired the property, we had pretty high conviction there was more to be found, both in growing the deposit, but also regionally. There was a ton of other prospects that really hadn't been looked at all since the early 80s. And it was a good way to, I guess, get the market to buy into what we felt with a hole like that. For sure.
It's not easy to plan, but we always hope for those kind of holes, but tagging one, that's the harder trick.
Yeah, no, for sure. I mean, there have been a couple of holes in that area historically, but not drilled since 1983, 1984. And it was surprisingly, there was never been any follow-up because it was open to follow-up. And the historic holes hit a bit of gold, like 3.5 grams over 36 meters, pretty nice stuff, but nothing of this tenor. Really firmly established this very high grade opportunity that at Difficult Creek, which we thought was there, but it was fantastic to see. And it's actually on a grade thickness or metal factor basis, it's our strongest intersection yet, which is saying something, because we've drilled 75 to 100 meters plus of 10 to 15 grams per ton gold at our main deposit, which are pretty smoking in their own right. So that it was up against some stiff competition, but yeah, this is far and away our highest grade.
That resource, if memory serves me, is about a 10-gram resource.
That's right. Yeah, so we've got in the indicated category about 750,000 ounces gold equivalent at 10.9 grams per ton gold equivalent. And then in the inferred, we've got another 134,000 ounces gold equivalent at about 7.
Up on 1 million ounces there.
Yeah. So, we're pretty happy with, it's a great start. It's great grade. It is polymetallic. It's a bit of the signature to the property as a whole. So, gold makes better than 50% of the value of that gold equivalent. And the rest is, copper, zinc, lead, and silver. What we're seeing at Difficult Creek, though, is way more silver. It's a real strong silver signature with the gold there, which is
silver and gold mainly.
Yes, yeah.
It's interesting. I watched a video you did with Eric Coffin from the summertime before you drilled this result, and I saw this. I then went and watched your. When I was watching the conversation, you had done a bunch of sampling in that Difficult Creek area, and that anomaly stuck out like a sore thumb. And it was really quite interesting listening to you talk about the geochem and the structural story before you made the discovery, and then the drill results come in to sort of confirm what you guys were talking about.
All right. Almost made it sound like we knew what we're talking about, eh?
Exactly.
Yeah. No, sometimes it works out. I mean, one of the things we really like about that prospect in particular is just the scale of the mineralization we see around. So it's probably a 1.5 kilometer by 3 kilometer footprint to the overall system we see. And we see a lot of variability across a big alteration zones. A big new vein field that we found last year that was a bit to the south of this area we've drilled it as well. We're waiting on those results. And we see a lot of zonation in the metals, both vertically and we're starting to get a handle on the geology, but it still remains very, very early days for us. Obviously with results like this, you're going to be hitting that one hard, very hard for a while to go.
Rolling up the sleeves on that for sure. I mean, that anomaly, that geochem was quite prominent in that central part of the claims there.
Yeah, it really is. And so that was a mandate of ours the year before. Is like, there's I guess I'll back up. There's been very much a dual track for us. I mean, we have a fantastic deposit, and that deposit, I mean, it's a beautiful deposit. It's high grade, and not only is it high grade, it's got excellent true width and vertical continuity. It's everything you want as a mining engineer from a mine development standpoint for keeping your costs low and high grade, low mining costs. Yeah, and you can come in from the bottom, so low upfront capital to get into it. So there's a lot to like about that. We're very much focused on establishing scale there, growing it. We're incrementally building it out. So that's been one primary focus for us. But in addition to that, we've known that there was really good opportunity for another deposit or two to be found on this property. And there had been shockingly little work done over the last 30, 40 years. So we went out last year to just get boots on the ground to better understand these other prospect areas, the prospecting, mapping, soil sampling, all the usual type stuff. And we were really keen on what we saw. And to your point about seeing that, sticking out like a sore thumb, that's what came out of that. With that geochemistry, you start to see bright spots that light up, whether it's soils or rock samples. Another one is another 4 kilometers north. So this area, Difficult Creek, is 4 kilometers from our main deposit.
Yeah, and it's big, that one up in the north too.
And it was where we had less data on it. We only had a couple of reconnaissance contour soil lines, but they were, kilometer to 1.5 kilometers long and pretty much anomalous across that whole length. And so we've gone in there to do more tee up work this year. We didn't get the drills to that one, but we should be ready to drill that one next year. But it just speaks to what you see in these environments where there's a lot going on, and they're probably all related in a big picture way, but you're going to see some differences between each of the prospects as we go ahead and get to know them better.
DC, this Difficult Creek is where you hit the super high grade. Then you've got a cluster of veins, you said, to the south. Is that?
Yeah, and that's all part of the DC prospect, but it's about 800 meters south of where we just drilled that hole. And there we just basically tracked out a vein swarm over, about 1 kilometer in length and up to 500 meters across, I think from, 10 centimeter wide to 2 meter wide vein. At surface. Right. It's up higher on the ridges. So there's topography there, right? So on the ridges, you get good outcrop, and you get off the ridges, it's all overburden covered and talus covered. And then you get lower in the flats where we're drilling, down low. So what we're seeing in these veins up high here, and actually the geologic story that we had going in is it's fairly flat lying stratigraphy. And we've got this overlying sequence of andesites. There are some intrusive feldspar porphyry units that come up through that. Below that is a dacite tuff unit. I don't want to get too technical here, but it's important because that same geology, that same dacite unit is the host to our ore deposit 4 kilometers to the south. It's the same regional guy. And so what we're seeing that at our main deposit, everything's been tilted on its end due to, it's just some folding and faulting in that area. But where we are at Difficult Creek, it's fairly flat lying. And what that means is you've been able to preserve that original sort of paleo elevation control. As you know, in these environments, metals seem to like to precipitate out at different sort of temperature and depth pressure environments.
Right.
So what we saw is up high, we're getting a lot of silver. You know, we got several samples that are better than 1,000 grams per ton silver. And as we got, but the gold was generally sort of a half a gram type numbers, gram. Every once in a while, you get up to 4 or 5. But as we got lower, which in this case, we had to go out laterally because you're going down the slope of the mountain, that middle difficult creek where we've drilled, we're seeing good gold in soils, and you could get 20 to 50 grams gold at surface. Well, you're lower. So we think, you know, one area we didn't drill this year was called Milkbone, which is at the very southern end of this whole DC prospect area. And there we've got up to 180 grams in gold in rock samples. We get 3 or 4 grams gold in soils at surface. It seems that there we've gone also back down to that same layer. So it's compelling to think that all this veining you're seeing up high, which is silver rich, is telling you you've got the same gold rich system below it all. So you're getting leakage above. Yeah. So we need to now take this and drill throughout that whole length. And it basically opens up that whole environment for a lot more. I mean, we like the silver potential, don't get me wrong, but
in that cluster of vein area, did you get down into that package of rock, the dacite?
For the most part, no. For the most part, we're drilling those veins themselves, which we're pretty keen on in their own right. We were targeting it, but we just didn't get deep enough on most of those holes. But we'll see. We'll see. That our approach to drilling it this season was to we had lots of targets within the DC target area, and so we basically we're taking a first pass approach of just testing all of them, see what we get, and then come back, because at the front end you don't know really where the best spot is. You want to see the results. So and it may be in our first hole and that's where we'll stay, but you know, I'm pretty optimistic we're going to see good things in these other holes as well. And so
as you learn more from the drilling, you can target better, so next year you'll hit the ground running on the
absolutely. And you know, we ended up drilling 17 holes total within that DC prospect area. 7 of that 17 was in and around this first hole that we released. The rest of the 10 or 17 are kind of other targets in that area. So
there's still a bunch pending from that DC area, right?
Yeah, 16 of the 17. Yeah. So there's so that was our first hole we drilled there, and it was the first results we got back. So we were very pleased with the start. We've released 3 holes to date. We should have some more soon. First hole was a step out on our main deposit, which hit like 20 grams gold equivalent over 4 meters as about 100-meter step out on the main deposit, which was a great, great start there. Then that was our first hole. The second hole we drilled was at the DC prospect. We had 3 rigs. And then the third, or maybe it was the fourth hole, was a met hole that we drilled. And it was infill, but it was still a good reminder of the tenor of the deposit that we had. It was 18 grams over, 70 meters or something like that, 56 meters. Yeah. So that was straight gold.
Will that help you with upping your resource, or just the step out will?
It will actually. It does a couple things. So we've our mandate there was to get better constraint on some of the highest grade, richest part of that deposit. And what we saw is with that hole, the resource blocks that we went through, it was significantly higher grade than those resource blocks. So it should up the grade of that area, and it certainly enhances our confidence in that part, which is when you're dealing with those high grades, you want to have a high degree of confidence of what you're, so, but more to the point, it was dual purpose, that particular hole. It was for those technical reasons on a better understanding the resource when we do an updated resource, but also it was to collect metallurgical material to do metallurgical sampling. And so when you have
bang it out of the park with some high grade on your
yeah, we'll take it. It was interesting. It was quite a bit higher grade gold. The base metals were a little lower in that one than we expected, but that's just the variability of the deposit. But no, that was a beautiful hole for sure. You never quite know what you're going to get, especially because all the previous holes were drilled at a different angle. We were coming back across to provide better constraint. But the met what that does for us is we know there's good metallurgy on this deposit historically, and but it's all 30 plus years old. So it's really important to update that and reduce anybody's doubt in the project, right? We know that it's good metallurgy. It's, you're going to produce a clean concentrate, conventional, straightforward sort of flow sheet. So it's important to just have the current data to support that, to basically say, hey, this thing should be a really simple, straightforward development project.
So on that project, what makes that resource quite exciting is not only is it high grade and it's got room to grow, but you can get at it from the where you can go sort of in the middle of it and then mine from above and below and keep following it. Is that correct?
Yeah, that's right. So, this was actually looked at to be developed in the early 90s by a company called Westman. They had the Premier mine that was near Stewart, BC, and what they were going to do was mine this. Premier at the time was under capacity, right? They needed more ore feed, and they were actually looking at Johnson to supplement that mining operation. So they're going to mine this, and they're going to barge the ore to Stewart and haul it up. It was about 900 miles away. It didn't quite pencil out. It was more or less a break-even proposition at the time. Gold was $300 an ounce. They opted to shut Premier down, and it sat there shut down until now. Ascot's developing that. But what we gained from that was they did a lot of the engineering, and there was no sort of red flags associated with the project. And what they looked at was a portal at basically valley floor level going into the side of the hill, as you described. And it was 900 meters of development and very good rock. It's sort of good environmental rock too. So it's clean rock too, with limited, negligible environmental risk. And then you'd be right into the ore deposit after about 900 meters, and then you'd mostly mine up. We now keep chasing the deposit down, so you'd be mining down as well, but you can use gravity as your friend. So, yeah, I mean, there is an awful lot to like from a mineability standpoint. The width, the grade, those things combined lend to, be long hole stoping type mine methods. So the kind of grade we have, most typical mines, it's 2-meter wide vein or something like that. So most of our ore body is better than 20 meters true width. Sometimes it gets better than 50 meters true width. So yeah, so it's, in our view, it's the ideal deposit. We have
plus you can start there and then keep drilling for more ore.
Yeah, no, exactly. So it's once you hit critical mass, you would expect that you're going to keep finding more. It's kind of the nature of the beast in these types of systems that you will find more. Question for us is what's the pace we can do that at, and that's why our other hole that we drilled this season that we've released. I mean, we'll have a lot more holes to come out, but was a step out to was a material step out and being about 100 meters outboard of them. So actually, I'll step back. We've got a resource. It's just under 900,000 ounces gold equivalent. Last year, we drilled out and we expanded out from that, but we didn't update the resource. We've now gone and stepped out further out from that. So we keep stepping out. We also are going to go back in and infill this area so we have enough density that we can bring it all into resource.
Done 2 step outs on the resource. You've got last year's and now this year's step out. So you've expanded it quite dramatically.
Exactly. And we haven't hit these sort of 40, 50 meter true width zones, but we still have hit, 10 plus meters true width in a lot of them. So we're happy with what we're seeing. All of that after we get the balance of all the results in, which is a lot now. We've got another 17 holes or so from the main deposit that have got to come back too, right? So we've got a lot of holes outstanding. And
how many? 17 DC, the veins, how many in total are you thinking?
Yeah, I mean, we're up over 40 now. We've just shut down. I can't remember the final number, if it was 42. So there were 17 at DC. We drilled 2 at our Kona prospect, and the rest were in and around the deposit area. So
so you got a lot of news still to come, and then you got to I guess as soon as you get the results back from the resource area, you got to do a new resource calculation,
Yeah.
but it's not a brand new one. So you're really expanding on that. So that shouldn't take too much time, right?
Yeah, no, I mean, I think give them 2 months following, once we get all the last of the assays in, we should be able to turn that around within a couple of months,
Geez, it
depending on
sounds
how
like
busy our resource model is.
you'll have news for Alaska almost from now until you get ready to start up again.
Yeah, no, for sure. I mean, obviously nobody likes the slow turnaround on assays, but that I guess is one silver lining, is that at least it keeps the news flow going through the
Exactly.
winter months. But
And I think it's kind of, in the past, you kind of could set your watch to tax loss selling season. And now with all the delays, there's going to be a bunch of news releases coming out, not just from you guys, but from a lot of guys. And that those could cause a lot of excitement and sort of get you through that tax loss selling season.
yeah, I'd like to think so. And we just, as we just closed a 18.8 million financing, so that leaves us with a treasury right now of 27 million, in the bank as of today, which is an incredibly nice position to be in, and it takes away any overhang. Like for any of the rest of our results that come out, there won't be any question mark about whether there's going to be a financing coming that would sometimes put a lid on the stock.
Right.
So that'll be it's nice to have that, and we've got
Well,
next year and beyond paid for.
and you've got Timmins as well, which I want to get into. But before we get into that, and yeah, I'm cognizant of the time, Darwin. You've been
no problem.
very generous. But before we jump over to Timmins, I wanted to talk to you also. So you've got the DC, you've got those vein swarms to the south of that. Then to the south and west of that, you've got the resource. But sort of, I saw an IP anomaly in your work as well that kind of stood out like a sore thumb to the west of DC. Can you tell us a little bit about that IP? And also, is there a possibility that this could all be connected at depth? Like, what's...
Yeah. I like your thinking there, Barry or Alan. It's like that you're actually along the lines of what we're thinking right now. So there is more or less between Johnson, the main deposit, and the DC area, a little bit deeper in the stratigraphy, because everything's striking like this, and it's you're a little bit deeper is a big Gaussianous alteration zone that we refer to as Kona. It's probably one of the bigger visible alteration cells that you see on the property. It's sort of valley scale. It's quite dramatic, and there's a creek that runs through the middle of it. It really pops. Anaconda did some mapping there early on, and one of the mineral assemblages they identified was something called pyrophyllite. It's an unusual clay. It usually tells you there's some very specific environments it can be around. Magmatic driven systems or high sulfidation epithermal systems, telling you if you've got hot acidic fluids that are altering those rocks. On top of that, last year we ran some reconnaissance IP lines across that part of the property just to have a look and see what was there. Very strong chargeability anomaly was kind of right in the core of that alteration zone. So this year we came back and did some infill lines to get better resolution on that. And so the last two
But
holes,
you could certainly see it sticking out.
oh yeah, no, you're absolutely right. Yeah, it really pops, and it's a real strong chargeability anomaly. And so now we have more on that. So just tighten up our drilling. And so we popped a couple of holes into that at the end of the season here. It's pretty interesting what we're seeing in those holes as well. And so to your point, yeah, I think it's more likely that all three are, hydrothermally linked than not, I guess is what I would say. Whether it's, it's not going to be one big ore body, but probability is they're all probably connected, in my view, anyhow.
Okay, so you did get a couple holes into that IP area?
We did, yeah. So we had 3 drills up there this year, and at the end of the season, we put one of those rigs. That was the last spot. We wanted to get something in there to have a look. So I don't know when we'll get the results back for those. It'll be probably a couple of months still before we see those results. But
so you've got more IP there and a couple holes. That's
yeah,
excellent. Yeah.
yeah.
Look like you got everything covered in that resource, the veins, the DC, and that IP area. You guys got good coverage with the Truth Machine this year.
That's right. No, for sure. For
Good.
sure. And we're certainly seeing variability in the styles of mineralization around the property. I mean, it's it's got aspects of a BMS, it's got aspects of epithermal. There's a lot. I mean, it's saying that's a type of environment that our technical team is very comfortable. They're the type of deposits we know well, and we think provide us some predictability to go exploring. But Mother Nature's it doesn't make it easy for you either. So
if it was easy, everybody would be doing it, Darwin. And
right.
as far as projects, just to put it into context, that have made brand new discoveries, if you will, of high grade, there's not this ranks right up there with what's happening in Canada, and you have a very modest valuation still compared to like the ones that I follow closely.
Yeah, no, I wouldn't argue with you on that. I mean, certainly I'd like to get a bit of an Atlantic coast, Pacific coast battle going for grade if we can, but no, I mean, certainly I think it's a project that's generated some truly spectacular drill intersections. Big picture though, we're in this, we've got a long-term game here, and in our view, it's the type of asset that should be attractive to a lot of people. I mean, it is to ourselves, but to have, this kind of grade over width, those are high margin types of operations that can generally generate a lot of ounces annually, but often don't cost as much to build. These aren't $1 billion, $2 billion projects. They're sort of $200 to $300 million projects to build. And that makes them very accessible to a lot of people, including ourselves, should we have the good fortune to get it to the point where, it does look like it's a mine and we can develop it. And, I think the big fundamentals in the gold space right now are very, very good for people with high grade assets, because the acquisitions, the M&A that's happened, everyone's like, well, how come there's no M&A going on? And in my view, what you're seeing, the trend right now is mergers of equals. We saw it with Barrick, you're seeing it with Newmont Gold Corp, you're seeing it with Agnico and KL, and that's kind of that's what's happening, but none of that is creating new supply of gold. All of that is just companies getting bigger. So what that does is I'm sure a lot of your viewers have bought into the kind of thesis on the gold price rising, and it doesn't make any sense that where it is right now. I mean, it's going to play catch up. There's a lag. You can't print that many dollars around the globe and not have it catch up. That's one side of the equation. The other side of the equation that nobody's talking about is a supply gap. And the more of these these big guys just buddy up together and join forces, none of that's building the new mines. And there's these deposits that are ready to go that are sitting on the sidelines. And when it does catch up, it's going to come in with a vengeance, I think. And so, we want to be there with this asset.
Darwin, one of the things I'm always looking for is those middle tier, because over our careers in the business, we've seen that middle tier just decimated. And there's projects out there that don't cost $1 billion to build, that, could be company makers and part of a pipeline to turn a company into a major. So, I think, there's a tremendous opportunity out there for smaller miners that make lots of money on what they mine and use that to grow and look at some of these projects that those new behemoth gold miners won't look at.
Yeah, no, I think you're right. I think there is a real opportunity for those mid-tier, those single asset or just a handful of asset producers out there. There's a lot of space for them to I think grow in this environment. That said, we do have a senior gold producer that has taken a placement in us, and they've continued bumping that up as we've advanced. So I have no doubt this is the type of a project that I know, is of interest, or certainly to a senior producer, or certainly thinks it has the
Yeah, because
potential to
there are
become a.
senior producers that like high margin gold.
Yeah, exactly. And most want to see a couple 100,000 ounces per annum. This, that's our goal, is to get this to a project that sits within that space. I just think those mid tiers that you talk about, I think they better giddy up, because they're gonna have competition with the big guys before long. Right now, the big guys are too busy merging with each other, but
Right,
eventually they're gonna have to start picking off individual assets as well.
right. Well, you certainly are lining up in that direction where you are with the resource and the exploration potential and how it all ties together, and that you're early in the game and that you are learning as you're going. So that could be a major breakthrough year next year when you get back in there and can really target things in a specific way.
Totally. And, obviously I'm getting ahead of myself talking about, future, you know, what this can become.
Well,
But
I appreciate it on behalf of our audience, because I don't think that's really understood by a lot of investors. So I appreciate your tangent into that realm of
yeah,
things.
and outside of that too, I mean, you gotta feel comfortable it's a project you can build, right? You can permit and build, I'm not sure if you're aware, but the land that we're on is native
Oh yeah,
corporations.
thanks for bringing this up, because one of the first things I heard was a jab when you came out. Yeah, but, and the yeah, but now you're going to get into why that's not really that big of a deal on the yeah, but side of things. So go ahead on the park and where you are and
Yeah,
how
yeah.
that all plays out.
Yeah, totally. I mean, I guess first off, we're big believers of Alaska being a great place to develop, permit, and build mines. There's obviously been a project or two that have, affected some of the market's perception of it, but we've operated there for a long time, and we understand the permitting regime very well, and we understand that most of the people of Alaska understand resource development way better than most of the rest of the continent, to tell you the truth. But in our situation, I mean, Alaska is very unique in how they settle their land claims. It was done in the 70s. It was precipitated both by the creation of the state, which really only happened, I think it was 1959, but also by the discovery of oil on the North Slope and driving that pipeline from the north south. And it's a bit of a tangent here, but I think it's one that I like to talk about, because I think it's one of the most unique and successful models for native land claim settlement.
Well, and it touches a soft spot for me too, because I'm First Nations, from I'm a First Nation and I'm entrepreneurial, and that's really what I get out of the Alaska situation, not situation, but the Alaska, how things have evolved there with the First Nation, the Native people, and what specifically your claim.
Yeah, I mean, it's fascinating. I mean, it's actually a great history, and actually, I got a book. There's a guy, Willie Hensley, who was one of the pioneers, visionaries, really, that kind of helped create this model. And it's called 50 Miles from Tomorrow. It's just 50 miles across the date line, I guess, the other way. But it's lend it to you if you're interested. But what they created was a for-profit sort of corporate structure where there was 12 of these corporate entities that were then able to select lands for their natural resource potential, and then they could manage those lands and develop them how they wished. And it's been very successful for NANA in particular. That's the group that basically owns the land where the Red Dog mine sits, the world's largest zinc, one of the largest zinc mines in the world, and it's produced a couple $1 billion that's been redistributed basically, well, virtually to every indigenous person in Alaska, because there's a sharing provision. Not only does that one native corp get money, but they actually have to share it with all the other native corps, who then share it with their shareholders, who are the indigenous people in the area. So there's a lot to like, from a corporate ethics and moral standpoint, when you can't do much better than that in terms of the sharing of the revenue and the wealth regionally in the redistribution. And it obviously certainly provides certainty. So from a social license point, there's a lot to like. Yes, there is a park that we are an in-holding within. Very interesting history, though. That park, basically, the Native Corps gave up a large portion of their land selections to allow its creation. So they played a pivotal role in the park really becoming a park, with the understanding that mining would be preserved on this tract of land. So there's a road and port easement right that's written into law through a federal act of Congress that ensures that we can develop. Obviously, we're motivated to do things right and to set a very high bar for ourselves. But as far as globally, the type of mines out there, high grade, underground, small footprint, revenue goes to the locals. There's an awful lot to like from that standpoint too.
And they're kind of your partner, if you will, right?
Yeah, absolutely. So they reached out to us when they were looking to find someone to develop the asset. We had a long history in Alaska, so we felt very privileged they did approach us, and we feel very privileged to be operating on this land. But yeah, they have a royalty interest, and they also have the ability to back into 25% of the project. So when there is a production decision, they have the ability to back in anywhere from 15 to 25%. They'd have to fund their pro rata share of mine build, but then obviously make their pro rata share of any revenue that comes from it. So, it's not dissimilar from some of the other deals. You see South 32, a big senior producer that's in with Trilogy on the Arctic and Ambler project up there. Nana has a back in on that one. Donlin, I'm not sure about.
Nana's the one that you are.
We're with CIRI, so it stands for Cook Inlet Regioning. So CIRI doesn't have as many mining deals. They've got lots of real estate actually, because they're in the greater Anchorage kind of environment. And they have oil and gas deals. They've got a lot of high tech deals as well. Very sophisticated group, great partners to work on.
Excellent. Well, it's I've done some consulting on First Nations issues, 2 junior mining companies, and there's sort of 3 pillars of what I think are important. Those are consultation well before it's required, respect, and the third pillar, and I get this from my experience in Alaska and having seen those Native corporations, is inclusion. And that's tremendously important, and why I came up with that pillar in my advice to companies is because of the Native corporations in Alaska. They're included in everything, and so it makes everybody work together more efficiently.
Yeah, it really does. It's actually a great environment up here, and it's a pretty neat model, and as I say, we feel privileged to be part of it.
I wish it would get more into Canada as well. I think it would make a lot of jobs, and those are definitely needed in a lot of areas in Canada. So that's great. Do we have enough time for you to give me a quick rundown?
I could probably get another 10 minutes here for sure.
Okay.
It'd be a shame not to talk about Timmins. So
what you guys have been able to patch together a bunch of ground that wasn't put together before. It was a patchwork, but there was a historical mine there with tremendously high grade. So this is what will keep you busy with the Truth Machine during the time when you're not so busy in Alaska. So there's 2 sets of areas where you can get results: what you've already done in Alaska, what's pending in Alaska, and then you've got now Timmins to go to. Tell me about Timmins. I'm very excited when I hear about that core that's just dripping with gold.
Yeah. Well, it's the one place that Croesus project. I told my project manager in Ontario, you've got the one project that might be able to best our drill hole at DC, because some of the rock samples that have come out of there have been unbelievable. We've got access to what was a private collection of 5 samples that are, they're all yay big. Not one is less than 10,000 ounces per ton, or 20% gold basically.
It
By weight.
reminded, when you were telling me about it, it reminded me of the display that Goldcorp used to have of their rock samples just dripping with gold in them.
Yeah, no, it's hard not to be impacted when you see these. And if you've ever been to the Royal Ontario Museum's gold exhibit, there's several samples that were pulled out of the mine in, I think it was 1910, that sit in that museum, and they're big.
And that's
they're
the
like,
mine that you have on your ground.
yes,
Okay.
that's right. Yeah, yeah, and there's some really interesting stories. And we have access to the property because Garfield McVeigh, who's CEO of Constantine, which is the company HighGold was spun out of and created out of, and I've worked with him for decades now. He had a family connection to this project, and so his father was involved with the project, and he had an uncle who was a mine manager. So there's this family, and it was in private hands for a long, long time. It was operated from the late 19 or early 19, what was it, 1910, 11, intermittently through the 30s. But what's cool about this sort of this connection through Garfield is we have access to all the stories, right? And old little notes and things taken. And one of the, you talk to the old timers that were involved, that the head grade from the mine was just under 3 ounces per ton. That's what went through the mill.
Wow.
But that's what they referred to as waste, because the lion's share of the actual gold was stuff that they would hand cob these samples, and they'd ship a steel box to the mint every week of specimen samples that got just smelted down at the mint. Apparently, that gold production was never reported as part of the sort of total ounces that came out of the mine. I think it was just under 15,000 ounces that came out of the mine. So not huge, but there's, I can speculate how much actual gold came out of the mine, but it's small. I mean, it's a small vein. It was cut off by a fault. So we've got ideas on what controlled that. There's a whole series of other veins on the property. And so we've,
So
when
that fault was what stopped them? They didn't.
Yeah, they mined. Yeah, so it was this vein where it was kind of seemed to be where that vein crossed a very specific geologic unit. It was a flow breccia that had a bunch of carbon-rich sediment and sulfide, and then it just, for whatever reason, it seemed to catalyze this incredibly high-grade gold. The vein itself tracks, over a kilometer in length, right back to the Pipestone Fault. It comes out at right angles. And there's been almost no drilling over the whole length of the rest of that vein. At surface, you're only getting a gram or two, up to 15 grams here and there, but all the past work was on that one area. We know there's other stacked veins and other veins around. So one of the targets is looking for more of those veins crossing that specific geologic unit. But that's only one of like a multitude of kind of concept prospects that we plan to start drilling. Just 2 or 3 kilometers along trend to the east is the Fen Gib deposit. It sits right in the Pipestone. It's 2 million ounces. They're talking about 3. I'm sure it's at the end of the day, it's going to be anywhere between 3 to 5. 1 gram system, disseminated gold. So that Pipestone break, we've got about 10 plus kilometers of that structure. We've got another one just north of that called the Munro break, where we have almost 20 kilometers of control of that. And then we now have these, like Croesus comes off at right angles, and it looks like linking structures or extensional veins between these 2 big master faults. Now,
parallel or cross?
Yeah, so the 2 big ones are parallel, and then we've got veins that are kind of at not quite right angles, but are at high angles to that, and that's where the Croesus mine has come. So So what we know for sure is we have gold on the property because it produced this incredibly high grade. We also know there's multi-million ounce bulk tonnage very close at hand. We also know basically there's been almost zero exploration on the greater property package since the 1930s. And
so
the
those
reason
veins have never been followed to
yeah,
depth.
yeah. No, we're drilling. We will be drilling stuff that's, as far as we know, has never seen drill holes where they had pits and trenches and stuck little shafts down on stuff throughout the property. And the reason for it all is because it was never consolidated. You had little blocks, itty bitty blocks here, there, like all dating back to 1910, 1912. One of the blocks we acquired was from the Schumacher estate, there's the town of Schumacher just outside, Timmins itself. And So we've done, I think, 13 deals now, consolidating all these little blocks. It's taken us a couple of years, and we're super keen to get after it. In the
Oh,
meantime,
wow.
yeah. In the
I mean,
meantime,
you've
like,
got a deep crustal fault structure going through there. You've got all these structures and veins and high grade and looks
yeah,
like a good plumbing system, and it's kicking out high grade. So, wow.
yeah. And so that, that's exactly. So you got all the fundamentals there, and then if you draw a radius around our property, you got Fen Gib just within 2.5 K from where we are. You go just a little bit further, you got Moneta. They've got the Golden Highway and Garrison projects, 8.5 million ounces sitting there. You go the other side of us, and we're actually sandwiched between McEwen Mining and this company Mayfair. So between the Fen Gib deposit and the Black Fox mine, there's 2 or 3 million ounces of past production and current resources. There's the Ross mine just south of that. So there's no doubt you're in an environment that has a lot of gold. You know, we're going out there. We're starting here very next week, I think. Drills should be pulling up on site, and it's just one rig that'll be drilling through into mid-December, but it's the start of what we expect to be a fairly long and aggressive campaign. And we equally like Golden Mile, which is right close to Timmins, where we've got a massive property package that's, again, almost untouched. You're literally looking down at a mine trend of 70 million ounces. You're at a major, same pipestone fault, tightly faulted mafic, ultramafics. And as you know, like in the Red Lake camp, how key those contacts are. They're coming in at right angles to this pipestone fault. It's grassroots for sure there, because there's a little bit of lake cover and there's overburden cover. It's very manageable to explore. It's a very shallow lake. But it's bizarre to have that kind of an opportunity as mature a camp as Timmins, because it's really tough in these mature established camps to get meaningful property packages, right?
Yeah.
Yeah. And that's our, Johnson's our flagship, so it often gets overlooked, but it's a hell of a nice, second asset or collection
Well,
of assets to be
I'm
operating.
hoping got my fingers crossed for you. I love to hear those stories about how things have evolved, because it seems like every big story always starts out with, putting the pieces of a puzzle together. And you've certainly done that in Alaska. Now it looks like let's keep our fingers crossed for what you're doing in
Well,
Timmins.
that's right. It's all good stories right now. We need the drill to back those stories up. But we have a vision there, and we've had it for a long time. It's been hard work, and we've been persistent to consolidate that land. What we didn't know is that our neighbors were going to get so active around us. So it's really put the spotlight. There's probably going to be 200,000 meters of drilling by our neighbors, in the next 12 months. So there'll be lots of eyes on that neck of the woods. And again, it's a good place to be. Yeah.
Well, on that note, Darwin, you've been very kind with your time. I better wrap this up. We can definitely do more of these in the future, because, as I said, we speak the same language. We kind of came from the same school of hard knocks over the years. So let me wrap it up, and we'll talk again soon. Oh, before I do, is there anything I forgot to ask? I think we covered a lot of good stuff.
If we did, I think we'll get it on the next round. So that's great, Al. It's so great to catch up with you again.
Yeah, let me wrap it up, and we'll say goodbye at the end.
Well, I think the next one we got to do is in person in Mexico. I had to come join you down there, bud.
Hey, anytime. We've got good food down here and some good tequila as well.
Perfect. You're talking about language. Take care.
There you go, folks. I've known Darwin for a bunch of years, and I said to one of our mutual friends that he's one of the good guys in the business, and it really makes me feel good that he's the guy finding something like that they have in Alaska. Really smart geologist, really does his homework, and has come from a good pedigree, if you will, of guys that have done their good homework, and he's got himself something really good in Alaska. I think Timmins is gonna start making some big noise here pretty soon, as I said earlier, they still have a very modest valuation compared to their peers that are finding high grade. And I would even argue that they're getting some of those high grades the others are getting are in smaller intersections. So they're hitting some really nice high grade, good thick intersections for high grade, modest valuation, lots of money, lots of work, lots of pending news. I think the news flow is going to be great out of this company. As always, my shows are for information purposes only. It's important for you to do your homework and speak with your financial advisor before making any investment decisions. And I always stress, do your homework. Try to understand these companies because you'll make better investment decisions, whether it's HighGold or any other company. Do your homework. Check out the HighGold's website. I think you'll understand why I'm impressed. And on that note, have a great day and we'll talk to you soon.